Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to the CNBC TV18 special. I'm Shireen Bhan. October last year, corporate India saw one of its most bitter corporate battles. It changed things for the House of Tatas and it changed things for the man who's now heading the House of Tatas. N. Chandrasekaran joins us here on CNBC TV18 for his first interview after completing 6 months in office. Chandra, appreciate you joining us here on CNBC TV18. You know, it's obviously changed life for you in many, many ways. But let me start by asking you, because this is actually the first time that we've spoken since you've taken over at the Tatas. What was the mandate that was given to you when you took this job on? What was the brief that was given to you when you took this job on?
They had concerns about the performance of the different businesses. I think it's a broad brief to get the group together and also to look at individual companies and then define the roadmap for the future. Some of them are private companies, some of them are public companies. So it's a broad brief. I spent the first month or so looking at all the data and taking stock, and also to look at individual companies and then define the roadmap for the future. Some of them are private companies, some of them are public companies. So it's a broad brief. I spent the first month or so looking at all the data and taking stock, and then I formed an agenda which I played it back to the board later on. I think fundamentally for me it's about there are big positives first of all in the group. I was just completely overwhelmed by the level of support I got from within the group as well as from corporate India. And the single most thing that also impacted me is the level of trust that this group enjoys, and everybody wants you to succeed. So there's a tremendous amount of goodwill which felt very, very good. At the same time, it puts a lot of responsibility as well. Then in terms of the areas that I needed to look at, definitely I needed to look at capital allocation, because that's the feedback I got from several investors. And
so are you taking on a fund manager's approach now?
They pushed me so much on returns and disciplined investment and all the things which you've heard from the media, but definitely the whole financial performance of the individual companies and the group as a whole, and the discipline in capital allocation and so on and so forth. And then also the second thing is, I feel while the strength of the group is the portfolio and the platform that you have, and pretty much we have a tremendous opportunity in each of the sectors. On the other side, the complexity of the group, it's extremely complex. And if we have to move forward, that has to be addressed. So in a manner of speaking, I feel if I can use 3 words, it will be like simplify, synergize, and scale.
Okay. Simplify, synergize, and scale.
That's the kind of approach in terms of the business performance. The second thing is also about I felt there are gaps in talent and for the things that I needed to do. So pretty much I decided that my first focus should be on building a team. So I went about building a team, and you've seen in the media, and pretty much it's all known. Significant amount of time went in building the team. The third
Is it done
thing
now?
is, I think more or less there, but you'll always have a few additions. But many key people have come on board, and a few more will come on board as we go by. But major portion of the formation of Tata Sons is done.
And the third?
And the other aspect is also we have to communicate a little bit more in terms of what we are going to do and how we do, etc. Bring a little bit more transparency, and that's something that I'm working on.
Okay, let me pick up on each of those points that you talked about, and let me start by asking you about simplification. 100 operating companies, 29 listed entities, over 900 subsidiaries. And let's now talk about performance. The top 10 companies account for 94% of the group's revenues, and 60% of your companies actually have a return of equity of less than 10%. So when you start to now look at whether it's restructuring, rationalizing, pruning, what are the parameters that you're going to put companies, individual companies through before deciding what you intend to do with them?
See, first of all, you can't do a clinical mathematical approach overnight. That's not the approach that I'll adopt. Let's look at it in multiple dimensions. First, going forward, what is the capital allocation policy? And that we have firmed up, and we will look at returns very seriously in every which way. Some companies look at capital employed, some companies look at return on equity, and we have worked out what the process is going to be, what the returns is going to be, and we will use it very, very rigorously. Now, when you look at the existing companies, in the existing companies, there are companies which are performing well, there are companies which are not performing well. And you've got to get into the details. You can't just say that this company is not performing well. Maybe execution is bad. Then we need to fix that. If there is every single company has to be looked at. If there is an opportunity to fix that, we'll fix that. If you cannot fix it, then we've got to take the call in terms of...
So in your assessment today, and you've spent the last 7 months doing exactly that, in your assessment today, how many companies fall under the head where it's not fixable anymore? It's time to let go.
I think I can't get into numbers and statistics yet because I would like to also tell you that I have to simplify some structures. If you look at the whole group, there are 3 big companies, Steel, Motors and TCS, and they have the scale. If you take the remaining, there are a number of companies in different sectors, but they have not scaled up. So I need to figure out a way of scaling them up. If you take the total group, the areas of growth has to be apart from Steel, Motors and TCS, which are segments of their own, if you will. Then we have the consumer, retail and consumer. Then we have financial services. Then we have infrastructure. Then we have, for want of a better word, tourism. In each one of these sectors, we have multiple companies. And also we have defense, multiple entities are there. We can talk about each one of those. And so at least there are 5 segments apart from the 3 big companies. And all of them present a significant opportunity of growth. And we want to address that. There we need to see how to consolidate where we can, how to synergize where we cannot consolidate, and how we scale. The area where, particularly I have not mentioned telecom, the area where we have a big issue is telecom. If you take telecom, we have 3 companies. We have Tata Teleservices and Tata Tele Maharashtra, which is the mobile consumer business.
Yeah.
Then we have Tata Communication, and then we have Tata Sky. While Tata Sky and Tata Communication was in great place, Tata Teleservices, the mobile consumer business, is really in bad shape. We have a huge debt, and the footprint we have and the kind of spectrum we have, it's very, very, very difficult. Close to impossible for us to be able to recover. So that's a company that we've got to find a solution very quickly.
You've been trying to find a solution for TTSL for a while. You've been on the lookout for a buyer. You haven't found one. So how much more runway do you actually have before you take a call on whether you pull the plug altogether? And B, where do things stand with the possibility of finding a buyer for that business?
See, whichever way, I have given myself Tata Teleservices is a number 1 priority to find a solution. And I had Steel also, then that deal has been done. On Tata Teleservices, I am at a point that I need to make a call.
Okay.
Okay, I'm looking at all options. I'll figure out a way this fiscal year.
This fiscal year.
Yeah.
So that could mean closing down the business altogether?
It could mean anything.
Yeah.
It basically
The
means
30,000
that
crore
I
debt?
don't want to put good money after bad money. I have a situation where already the debt is about 31,000 crores. Additionally, I have spectrum liability. And we are making losses, cash loss on a month-on-month basis. So it is not a business that I can easily turn around unless or otherwise I'm willing to commit another 50,000, 100,000 crores.
And you're not
that's
willing to put that money.
That's not prudent. So I will make a call. I am at the point now. Don't ask me whether it is this month, this quarter, next quarter.
You said this financial
but
year.
I am this financial year. I would like to find a solution.
Do you still believe that there is a possibility of finding a buyer?
I mean, let's not speculate because
You've been in talks.
every newspaper,
exactly.
your
exactly.
channel, other channels
Exactly.
has been speculating.
Yes.
In fact, the speculations have been more than what is really happening.
Huh.
So I don't want to add to it.
Would it be fair to say that the interest from a potential buyer at this point in time is not looking particularly bright?
So let us leave it at a statement
Okay.
that I have to find a solution, and I'm committed to finding a solution one way or the other.
Okay.
I will have to take a tough call, and I will.
Okay. So you said TTSL is your number one priority. What is your number two priority in terms of the company or the business that requires fixing today?
No, there are. See, basically, if you look at the group, in the group, let's look at a concept. I think priorities are also there for growth. Priorities are also there for execution. Priorities are also there for balance sheet. From a balance sheet point of view, a few companies are highly leveraged. Telecom is number one, Tata Motors is number one. Then we have a high leverage in steel. And I think we have found a very beautiful solution in the way we have formed the joint venture,
With ThyssenKrupp Group.
the way we have done the capital structure of that entity. I think it frees up Tata Steel India to focus on the growth in India. So Tata Steel in India, we have definitely aggressive growth plans, whether it is organic or inorganic, because there is demand, there is market in this country. So we will definitely go about building the steel business in India. And the JV will operate on its own. The capital structure is solid, so the JV will survive on its own. In fact, it will grow on its own. Then coming to...
If I can just pursue the conversation on steel for a little bit longer. You said that the focus now very clearly is going to be on growing the business in India, organically or inorganically. There's a bunch of potential distressed assets on the block. Are you on the lookout? Have you examined any possibility closely?
Very much. And, I'm not going to tell you...
Don't give me names,
but definitely,
you feel
yeah, absolutely.
it looks good?
It all depends on where it ends, finally.
So what is
what
is the kind of war chest that we would be talking about for potential acquisitions within the steel business in India?
I think, it's fair enough to say that whether it is organic or inorganic, we have the potential to double our capacity in India. For what period of time, I don't know. It depends on whether it is organic or inorganic. But definitely, I think there is a big possibility of growth, and we will look at what deal comes and at what price, and it makes sense, and we'll do it. So otherwise, we will go about parallelly looking at organic options.
Looking at organic options.
Because our Kalinganagar plant has to scale up.
Sure. Again, just a quick word on the steel business. And if one looks at the return on equity, Tata Steel at 2.5%, JSW Steel at 16%. So given the outlook and the vision that you have now for the domestic business, and the fact that you believe that you will be able to double capacity, whether organically or inorganically, what is it going to mean from an investor's perspective?
I think, if you look at the Tata Steel, once you remove the European business and the pain, still, while doing this deal, we have taken some pain in Tata Steel India. But what it does is now it brings all the capital ratios under control, both for the European entity and for Tata Steel India. Immediately, once this structure is done, we will have very respectable capital ratios. And Tata Steel India is a well-run business, and the EBITDA they produce for every million ton of steel is a benchmark. So I think from here, in terms of returns, Tata Steel will perform exceedingly well.
Okay, let me talk to you about Tata Motors, and you acknowledged this in your speech at the AGM as well, that you're disappointed with the performance of Tata Motors. You hope that things will turn around. You would like to get back to the path of providing dividends to shareholders. I spoke with the MD, and he said that there is a long-term turnaround plan, and there is currently a short-term turnaround plan that has already been put into place to ensure that we see a turnaround over the next 6 to 9 months. What is your view specifically on Tata Motors? Because whether you look at margins on either the passenger vehicle side of the business or the commercial vehicle side of the business, lagging peers like Maruti and Ashok Leyland quite significantly and for significant periods of time. What is the view now on Tata Motors?
See, Tata Motors, we are definitely on the move. The team is working extremely hard. We have had intense discussions. And if you look at Tata Motors business per se, on a 280,000 crore business, approximately 235,000 crore business is Jaguar Land Rover, which is doing well, which is giving a double-digit volume growth year on year. And some years their margin is good, some years their margin is not so good. But the point is that they are very committed and their balance sheet is good. And they have significant number of products that are being launched. And it's all committed for 19, 20, 21 and so on and so forth. Now if you look at the remaining almost 45,000 crore business, 35,000 crore business is commercial vehicles. And I think passenger cars are roughly around 8,000, 9,000 crores. And we have to get both the commercial vehicles and the passenger cars performance, both in terms of growth, market share, as well as profitability. And that's the journey we are on. If you look at commercial vehicles, the markets, second is any product gap that we have, we are addressing it. Some decisions have been taken and those vehicles are coming, some in the works. And there is a significant effort going on, specifically on cost management and profitability improvement. And you will start seeing the results. I hope the results will be seen sooner than people expect.
When you say sooner than people expect, the guidance broadly, if I could call it that, the guidance is between 6 to 9 months. We'll see.
I think Gunther is the right person to speak, and I am fully supportive of what the team is doing, and we are engaged closely. Then in terms of the passenger cars, I think passenger car business margins are suffering very deeply in every single car model. Every single model, it's suffering. And that's something that we've got to work on. And there the challenge is twin. First is they've got to get the volumes. At the same time, they've got to fix the margins. Because you see more volume on a loss-making product and you'll continue to make more losses.
Yeah.
So I think I must say that the recent models have got a lot of traction. And we are looking into the contribution margin and the margin of that business. And that is under review as we speak. So Tata Motors is a priority. I think we will come out strong, both in terms of market share and in performance. And I'm also very happy that we won this EV. That's again a call we took because we spent time looking at all the models. They've got multiple models on EV. They've done a lot of work. And we sat together and then said, we've got to go for it. And I'm very glad the team put up a great show. And we're there.
Since you spoke of the bid that you've just won, at 10.2 lakhs per vehicle, do you make any money? Because the second bid was M&M, and there's a difference of 2 lakh rupees between your bid and their bid.
I've seen the comments by Pawan and Anand, both of whom I deeply respect. But I want to tell you that we'll make money.
You will make money?
Yes.
Okay. And is this going to be done through the Sanand plant? Is Sanand going to be...
So leave the details. If you want the details, you go to Gunther and Mayank.
Okay. So you're not going to...
I have the details, but I'm not... I don't want to speak on behalf of Gunther or Mayank.
So let me...
You will tell them that your boss told me this and...
You are the boss, sir. You're entitled. You're entitled to speak.
They are working very hard and they know what's going on. And I think you should...
Okay. Let me then pick up go back to my conversation with Gunther and put that forward to you. And when I asked him specifically, what is the future as far as the Nano is concerned? And he said, well, that decision will have to be taken in context of our strategy for passenger vehicles. And that decision will have to be taken keeping our view on where we stand as far as the entry-level segment is concerned for the passenger vehicle space. What is the call finally as far as the Nano is concerned?
See, I want to clarify this for everybody. This question keeps on coming. People are targeting Nano for no reason. Tata Motor passenger cars has multiple models, starting from Indica. they've got a series of models.
Yeah.
The only model that makes money is Indica. Every other model makes loss.
Sure.
And nano loss on a yearly basis is less than, I have the actual numbers, is less than 4%. Is about 4% of the total loss that the passenger car vehicles make. Okay. And so whether you shut down nano, whether you give it a life, numbers are not going to change. Needle is not going to move. But we've got multiple options in front of us for not only for nano, but for every other model. Okay. And we're evaluating all those models. In fact, the way the passenger car, I'm also learning this industry. I'm not an auto expert, but
Yes.
I'm learning all this. I've looked at the financials, but I'm also learning these models. Every other passenger car makers always has multiple models. So how do you actually make money on these models if you're able to sell, especially after you've depreciated the investments on the product development, you start making money as long as the product sells. So this decision has to be taken for every model. But the only limited point I want to make is that this is not a $1 billion question in front of Tata Motors. Okay, but this is a question that will be answered for every model. And we will see what is the model that we can be repurposed, what models we will launch for an electric version, and what models can continue to sell, and what models have to be upgraded.
Okay.
All those questions have to be looked at. But Tata Motors actually has a very small passenger car business. So we need to scale up because, let me say, we are 1/10. The number of vehicles we sell is 1/10 of the market leader. Okay, so that definitely means there is a market, and there is and overall the market is also expanding. So there is a big market in this space. So how do we capture that market? And it's not going to be a one-quarter affair, but we'll work on it.
Let me then ask you about JLR, and you spoke about JLR. In terms of scale versus its global peers, I mean, if you look at BMW or you look at Daimler, JLR, I think for FY17 was about 0.6 million units versus 2.2 for Daimler and about 2 million for BMW. So what is the aspiration, A, for JLR in terms of scale? And B, again, the question that keeps coming back, are you looking at a listing for JLR? Is it likely to be anytime soon? Is that an active consideration today?
Couple of answers. I think you should meet Ralph Speth when he comes here or when you, and they've got very ambitious plans. Obviously, how we achieve that is something that we've got to see, because the amount of money that we are investing in terms of new product development, the capital that we are putting in place is very, very significant. We put 4 or 5 billion every year. So there is a big ambition, and what is the route to achieve that ambition is something that that is being deliberated upon.
Is an inorganic opportunity also being deliberated?
If there is an opportunity, yes, but there are not easy options in that space, because they are a very super high-end luxury segment, and there are not easy options there. But definitely, Ralph and team have high aspirations. And see, you never answer these questions like whether you are going to list JLR, but I can definitely say, if you're asking me whether it's under active consideration, the answer is no.
The answer is no. Okay, so not actively looking at the possibility of listing JLR. What is the strategy going to be as far as Tata Power is concerned, and specifically with respect to Mundra? Where do things currently stand?
See, Tata Power has, to me, 3 priorities. And, I don't want to talk specifics, but at a broad level, if you look at it, one is we have got to deleverage the company. And depending upon which accounting standard you use, their debt is either 6 times or 8 to 9 times of EBITDA. So it's a very high leverage, and that needs to be fixed.
What is the plan of fixing it?
I think we have to pay down the debt. And
no, so which means sale of assets.
We're looking at definitely how we can get out of the non-core assets, and what does it mean in terms of monetizing. Definitely, Tata Power board is deliberating on that. So we will figure out a way. But the board definitely is of the view that the leverage has to come down.
Okay. Is there a target that you have in mind that you would like to move towards?
I think we have internal targets, but I I wouldn't want to talk about it, but basically get the leverage under control. And each of these industries have got benchmarks, and it's what's acceptable, what's not acceptable. At least we have to move towards what's acceptable.
No, like in the case
Second,
of TTSL, you said very clearly that something has to be done within this financial year. In terms of Tata Power?
Tata Power situation is, it will be gradual. It's not like we will get the leverage going in the right direction, and then there will be a destination, and we'll hit it at some point. Second is we've got to find a solution to Mundra, and we don't have one. We don't have one. The current situation we have is untenable, and there are no easy options. And we are looking at basically a couple of options now. One is, this talk about whether we can, there's this proposal that's floating around in terms of divesting.
Yes.
Second option we have is whether we can get a cheaper coal, and we've not found one. So we're exploring all options, and currently I would say that it is a problem, but we don't have a solution, and we're actively thinking.
Has there been any further conversation with the government about the future and the fate of Mundra?
I think you have to talk to Anil.
Okay, so you're going to pass on that. But
The third aspect is, again, we'll have to simplify the company. That's a theme that we are working on.
So when you say simplify the company, what should
we're
we?
looking at what markets we should be in. Should we have presence in many markets? Should we have smaller plants? Should we have so many JVs? So all these things have to be looked into, because unless or otherwise we can scale again, you're not going to make progress.
Okay.
So these are the three things that Tata Power Board is looking at.
I just want to digress from talking about individual companies to pick up on one of the points that you mentioned earlier on in the context of simplification, reorganization. You said where consolidation is possible, you will look at consolidating. If I were to just look at your listed universe now, you've got Tata Motors in the auto space, and then you've got smaller listed entities like Automobile Corporation of Goa, Automobile Stamping and Assemblies. Technology, CMC has already been done with TCS, but then you've got Alexi, where Tata Sons has about 42%. In the metal space, there's Tata Steel, Tata Metallics, Tata Sponge Iron, TRF, Tin Plate. Where do you see the scope of consolidation today?
Thank you for reeling out my task list. So, there are options, and there are things to do in every area. And obviously, listed companies are sensitive, and we have to take it up in the boards, and some will make sense, some will not make sense. And unlisted companies, easy calls sometimes, but everything that we do will be done very judiciously. Nothing will be done in a rash manner. But there are opportunities everywhere. Give me some.
Already been done with TCS, but then you've got Alexi, where Tata Sons has about 42%. In the metal space, there's Tata Steel, Tata Metallics, Tata Sponge Iron, TRF, Tin Plate. Where do you see the scope of consolidation today?
Thank you for reeling out my task list. So, there are options, and there are things to do in every area. And obviously, listed companies are sensitive, and we have to take it up in the boards, and some will make sense, some will not make sense. And unlisted companies, easy calls sometimes, but everything that we do will be done very judiciously. Nothing will be done in a rash manner. But there are opportunities everywhere. Give me some time.
No, I'm not the one here to decide on time, sir. That's your prerogative.
I've been here for 6 months.
But broadly, in just the three areas that I listed out for you, which is the automotive space, the technology space,
I can't be specific.
But do you see that these are the three spaces where you would like to see the consolidation?
So there are many other spaces as well.
Many other spaces, but these three specifically, you would like to see consolidation?
We look at across the board.
Across the board. Okay, let me then...
Wherever possible, we'll do it.
Wherever possible.
Possible, and it makes sense, we'll have to press the button.
Okay, let me then go back to talking to you about the possibility of scaling up companies. Tata Global Beverages, for instance. What is the aspiration there? Once again, the possibility of Tata Coffee and Tata Global Beverages and the possibility of consolidation there. Is that something that has been considered at all? What is the aspiration for this part of the business?
See, let me just say simply that we are the best brand in terms of the Tata brand. We have a huge connect with the consumer base in this country. The Tata Group, I think I read somewhere in in the analytics that we almost touch 900 million consumers. And so if you look at the group brand and the consumer that we have, I think we have the most powerful story and we have the biggest opportunity. So definitely our consumer businesses have to scale. And whether it is in terms of only merely by consolidation, the answer is no. There may be consolidation opportunities, but also we look at our product portfolio. And again, we'll have to take a call on which markets in which we operate. Because I feel that the domestic consumer market is huge.
So would it be fair that that is going to be the emphasis for most businesses within the group, because you see that the India story, to your mind, is more attractive?
See, I mean, you don't say anything definitely, but I feel very bullish about the India story. Where in the world you will have such a large consumer base and such a situation where the affordable spend for the consumer will continue to increase for a long period of time, and the demography is such, the aspiration of the consumer will constantly increase. So it is a question of organizing ourselves, whether we may have a presence in a space today, we may not have a presence in the space today. Whether it is consumer, whether it is retail, whether it's financial services, organizing ourselves to address that aspiration is a huge opportunity. And I'm bullish on that.
Once again, and I go back again to the scale issue. You know, Tata Pigments, Tata Ceramics, Tata Decor, Tata Unistore, Tata Petrodyne. I mean, have you now evaluated, and again, I understand sensitivities involving specific companies, but is there now clarity that you have on which are the spaces that you believe are not viable for you to continue in the future, of these companies that so far have not been able to create that kind of
Okay,
scale?
I will answer it this way. Do I have clarity? I have clarity. Do I have a view in terms of what should get consolidated, where it should go? Yes. But it will be only my decision? No. I need to engage with the
Individual boards.
So listed company individual boards, and if it is even in unlisted situations, I'll have to get a view, because something may look very small today, and I may be of the view that last 3 years or 4 years it has not performed, or 10 years it has been there in some form. But the point is there a way that there's a huge opportunity of growth in that company? That's something that specifically we look at. We are looking at all of those, and all the companies we listed, we're looking at.
A lot of people making representations to you about where things stand as far as their businesses are concerned, and where they see the future, trying to convince you to bet on them?
No, I think, it's a question of being transparent. It's a question of not taking any high-handed decisions. Every decision has to be properly analyzed, and it should be data-based. As long as you do that, I think you can carry everybody.
Okay. Two more spaces that I want to talk to you about. One, of course, is Indian.
I always believe that I have to convince or I have to get convinced.
Fair enough.
Very simple.
Fair enough. So at this point in time, the mandate is you convincing everybody else. I would imagine that that's what's happening, and that's what you're spending your time on. But let me ask you about Indian hotels, and the process of exiting non-core assets within Indian hotels has been underway as well. Taj Mansingh, that's going to be the big one, and I'm sure that you've got your war chest ready to take on the big boys, domestic big boys as well as the international big boys. Are you ready for a fight on Indian hotels for Taj Mansingh?
I think Taj Mansingh is a very prestigious property of the group, and I think frankly the group has done a fantastic job, and it's been a flagship hotel, and we have paid our dues. We would definitely like to keep that asset with us.
So you're going in for a fight?
We will see. Everything has to make sense eventually. We'll see. But we are very, very keen to have that property because it's been our hotel for a long time.
Yeah.
And there are many people outside the group also will want to see us succeed. Because so many people, whenever people meet me in this connection, they tell me, no, we hope that it'll stay with you. So I hope it does.
Okay. Well, I'm digressing a little bit from Indian hotels. The hope within some quarters of government certainly is that the Tata should actually come back to Air India. Is that under active consideration?
See, so far there's only been broad news about Air India being divested. Still,
it's not news, sir. There's a group of ministers that meets very regularly.
I know.
So that process is underway.
Fully the process is underway, but we still don't have all the details. So every business proposal will be very seriously looked at, and we will look at that, definitely. But currently we don't have the data. So because what is the structure, because there are so many different groups within Air India. And then there is a real estate, there is debt, there is liabilities, and we've got to look at all of that. But we'll definitely look at it. Definitely, we have the team, which can definitely spend the time as soon as the details are out.
So you're saying that if it makes business sense, you would consider the Air India option?
See, that's true for any proposal.
No, you already have two aviation businesses.
Here again, if you look
both,
at...
you're not the market leader.
We need to look at aviation as a whole. That's something that we are subscale. We've got two airlines, both are subscale. So in fact, any decision that we take, Air India or otherwise, we have to have a story. Because we can't be operating with 15 aircrafts and 20 aircrafts. Because I come back to this. I feel scale is important. In every industry and every group we operate in, scale is important. Without scale, you get to a situation where you're all over the place, and it's very, very difficult to pay management attention. And all problems usually come because of marginal place. That's my learning in life. So you can't have too many marginal plays. So we got to look at holistically. And there is see, I will tell you, there are things that I have to do today. There are things that are important, and I will have to do it for a period of time. And everything doesn't happen overnight.
Sure.
Because these are strategic decisions, and data is required, and a long-term story is required, and we'll take a call.
So, as I said, the process is currently underway. Indigo has already expressed its interest in Air India. They would like to take only the international operations, but we don't know whether that demerger will in fact be approved by the government. Would you be interested in all of Air India, or like Indigo, are you also interested in some parts of Air India?
This is, we have to look at all the data. We don't have all the data yet.
Have you had an informal conversation with your partner Singapore Airlines on whether this would make sense for you?
Do you think I would not have?
I'm asking, sir.
And do you think I would not have? And do you think that I'm going to tell you what we discussed?
So, are they on board with the possibility?
As I said, do you think I want to answer the question?
Okay, fine. I shall read between the lines there then. So then as far as and we shifted to aviation, but I'll move back again to Indian hotels for just a second. What next now as far as Indian hotels is concerned? You have been able to bring down your debt to equity to about 1:1 by March 2017. What is the aspiration now as far as this business
I think Indian
is concerned?
Hotels is a great brand. Again, a great brand. See, pretty much, I know I should not look like a broken record. Simplification is required there also. And currently we have a debt. I think we have roughly 3,000 crores of debt, and that needs to be brought down. And we are going for a rights issue of 1,500 crores, which the board has approved, and I think the process is on. There are non-core assets in Indian Hotels, and I'm waiting for Puneet to join. Puneet is joining in first week of November. I had an opportunity to meet him last week when I was in Europe. So as soon as he comes, we'll sit down and have a discussion.
Let me then ask you, sir, about your aspiration for the financial services business. You've got one listed entity there, which is Tata Investment Limited. You've got Tata AIG and Tata Finance and so on and so forth. I mean, you know, how strategic is the financial services play going to be for you, given the fact that this is a highly competitive and some would also say commoditized market?
No, I think that it's a beautiful business. Okay, I think that it's a very strategically important business. Again, if you look at our financial services business, we leave the Tata Investment Corporation. That's I think that I would put the remaining 4 as the financial services business.
Okay.
And that's more an investment business. We have 2 insurance companies, and we have Tata Capital, and we have the asset management company. I think we have, again, it comes back to a couple of things. We have a fantastic brand, and for the brand positioning we should be doing better. And we should also look at the group leverage we have, whether it is in our insurance space or NBFC space. I think we can scale. And our insurance company are doing very well. And our Tata Capital business is also on the upward curve. We have to appoint a CEO for Tata Asset Management. We did appoint a CEO for Tata Capital. He's joining again in a month's time. I think we'll take a holistic look at financial services. We will look at distribution, we look at digital. I think we will look at the processes and the cost-income ratios. I think there are many different aspects that we want to pay attention to. We want to be a big player in this space, and we have everything in terms of ingredients. So we need to bring it all together.
So would the rule of 3 apply to each of your businesses? And when I say the rule of 3, that you want to be in the top 3 in terms of the pecking order, and that will decide future capital allocation, that will decide the kind of bets that you make on that.
I think that will be a too harsh a statement to make, and too strong a statement to make too early. I think the group has enormous opportunity, and we have people who want to deliver, and we want to look at each of these companies where they are and where they can reach as an aspiration, but they can't overnight switch to some number 1 position or number 2 position. That will be very unfair ask. But as long as we can on the right direction with the right velocity, we're fine.
Okay. Very quickly, I'll ask you about your defense aspirations. Which is going to be the main entity for your defense business? You know, there's parts of it in Tata Motors, parts of it in Tata Advanced Systems. What is really going to be your defense?
So we have 4 defense entities, and some are, at least 2 of them are unlisted, and 2 of them are subsidiaries of listed companies. See, I think, you know, we will have a single face to the defense market. That's my aspiration. Whether it's consolidation or cooperation. Okay, we need to see where we can get to. But my aspiration is that we will have a big play in defense, and we will have a single face to defense.
Any specific area within the defense space that you would like to
I
focus?
think all the spaces that we are in today, we will play in all the spaces. See, actually, if you look at the Tata Group, one thing that has been a big learning for me after I moved to this job, see, Tata Group merely does not look at only financial performance. And that's something that I'm focused on, as you know, very strongly. But Tata Group has always done things to build India. Whatever the priority for the nation, Tata Group aligns very quickly. I think defense is a priority for the country, so we will align, and we will be a big player. Because if there is an indigenization of defense, definitely we would like to play. And it's a long-term game. This is not an industry which will happen in 12 months and 24 months. I think I can say that we have spent time on this, and we have got a blueprint, and we have got to see in terms of structurally, when I say blueprint in terms of structure, how you have to go, and we are exploring a couple of options, and hopefully you will see us executing in 6 months.
More partnerships like we've seen inked with Lockheed Martin, is that on the cards?
I mean, wherever it makes sense, yes. we will need partners because in this space we don't have the skill sets in India. So we will need partners. And I have also experience in working with some of these companies in my previous job. So we look at what partners we can bring.
So given the fact that A, you're bullish on India, B, you're bullish on the fact that you want your businesses to look at the domestic opportunity, what kind of investment plans can we expect over the next year or so as part of the group?
First, let me take the write down on Tata Teleservices. Then I'll come back to it.
Okay, that's no laughing matter.
That's for the next interview.
Okay, that's.
Now I'm in a mood to take write-offs now.
Now you're in the mood to take write-offs. Since we're talking about write-offs, and as I said, I didn't want to dwell on the past, but I'll just ask you about that, about the big headline that came in from Cyrus Mistry about the potential write-down, which caused a great degree of anxiety and nervousness. Now that you have assessed where things stand within the group, was that an exaggerated claim?
See, I don't want to. I'm not here to pick a fight or anything. I mean, so unnecessarily don't want to be drawn. But I tell you, when you run such a large group, there will be decisions that will be taken that will go well, there will be decisions that will not go well. When the decisions go well, you move on. And if you're talking about write-down, what did you talk about JLR? Investment was less than $2 billion, $1.5 billion or something. Today the value of Tata Motors is 100% JLR value, more than 20 billion. It's a remarkable story. So some goes well because the strategy is right and execution is right. Some doesn't go well because the strategy may be right, external factor was wrong, or execution is wrong, or we didn't take corrective action at the right time. When you make big bets, we have the responsibility also to take corrective actions. And some will go well, some will not go well. And if it doesn't go well, just you move on. There is no point in saying TCS was listed at the right time. If TCS had not been listed at the right time, it was a very complicated decision at that time in 2004. I mean, I was at least very closely involved with Ram at that time. And, that decision, had it not been taken that day, we wouldn't be where we are today. A group also will not have that firepower. So I feel that you take decisions, and some are bold decisions, and you hope that you can make all of them work. And if some of them don't work, then you've got to take tough calls in putting them behind and moving on. And if you don't, then you will never have the stomach to take the next big decision. And you need to always have the stomach to take the next decision.
Well, speaking of having the appetite for risk and having the stomach for risk, the underperformance that we've seen, 132 billion, that was the Tata Group value in 2015. It's down to 131 billion in 2017. Priority for you, Chandra, is to sort of get all engines to fire.
Absolutely.
Yeah?
Absolutely. Absolutely.
And you feel confident of being able to do that?
You see, I don't want to be arrogant to say what I will deliver. That's an outcome. That depends on a lot of factors. But you will not find me wanting in setting up a very high aspiration.
Well,
count on me on that.
Count down you on setting a high aspiration for the group. Are you getting any time to run at all?
Yes, I'm very regular now because the travel has come down. So I'm really enjoying it because the number of days I used to travel in TCS and the number of days I travel now has significantly come down. So on a personal front, it has been fantastic.
And the marathon has well and truly begun for you. And Chandrasekaran, appreciate you joining us here on CNBC TV18. Thank you very much for your time and for explaining to us and giving us a sense of what the blueprint looks like for the future for the Tata Group. Thanks very much, and we wish you the very best of luck.
Thank you, Shirin.
With that, it is time for us to wrap up this CNBC TV18 special from all of us here. Goodbye. Many thanks for watching.